Welcome back to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me one of our most frequent guests, Alasdair Macleod. And Alasdair writes these weekly essays at goldmoney.com. Goldmoney.com. He is a senior fellow there. I suppose I don't need to spend time telling you all about Alasdair Macleod. He's on so frequently, but I do like to remind you that he's been a stockbroker and he has been deeply involved in the markets. Not just any stockbroker, I have to think. He never was my broker, but I have to think that Alasdair was always diving deeper. Can't imagine that he was just trying to sell people stocks just for the sake of making money, because that's not. Alasdair is a deep thinker, and that's why we like to have him on. He helps us to understand why things are happening, not just the fact that they are happening, but to understand the underpinnings, the dynamics underneath, and that's why he's so valuable to us. Thanks for joining me again, Alasdair.
That's very much my pleasure, Jay.
Yeah, it's really great, and I think we should tell people that I think it's every Thursday, more or less. It's Thursday, isn't it, when you put out your most recent piece, or is it Wednesday? I get it on Thursday.
It is Thursday, yes.
Yeah, Thursday.
So it's Thursday. But actually, sorry if I can just interject.
Yeah, sure.
I actually put one out tonight on the COMEX position in gold.
Oh, good.
Which I think your listeners might be interested in looking at. It's actually I think it's a very interesting juncture in the gold market at the moment. So from that point of view, I can recommend it, even though I wrote it.
Well, absolutely. So they should go to Gold Money, and it's the research page, and I think it's Gold Money Insights. Insights is what you write.
That's correct, yes.
Yeah,
yes.
Exactly. Well, I'll be looking forward to that, and because we have so little time to cover what I want to cover, I won't ask you about that more, but we'll certainly be talking to you about it in the future, I'm sure. Today, I named today's show the Dollar Destruction and a Golden Chinese Currency. And you wrote 3 articles, Alasdair. June 18th, the crisis goes up a gear. June 25, a collapsing dollar and China's monetary strategy. And then July 2nd, prices are going to rise and fast. Those 3 topics I'd like to get into. The crisis, first of all, maybe talk about the crisis goes up a gear, your June 18th article. In that article, you wrote, and I quote, dollar-denominated financial markets appeared to have suffered a dramatic change on or about the 23rd of March, end of quote. So what changed on that day, Alasdair, and what do you think the markets were telling us with those changes?
Well, it was just a fascinating juncture where suddenly everything had been in one trend, going in one direction, whatever that direction was. Some things were going up and some things were going down, and then suddenly they all reversed at that point. And gold, for example, bottomed on that day. In fact, actually, it was the day before that, the business day before. Copper, Dr. Copper tells us all about Chinese demand for industrial materials and so on and so forth. That, after a period of falling, took off. The US dollar's trade-weighted index peaked at about 102, and since then it just tanked, really. The S&P 500, another one, that had been going down, and now it's been going up, and that was, again, the turning point. Silver-gold ratio, another interesting one. And last but not least, of course, oil, the WTI. But there is a caveat on oil because the following month there was that problem with the contract. If you remember, people were not expecting to take delivery when the contract came due in April, and consequently they had nowhere to put it, and they had to sell it, get rid of it at any price, including a negative price.
Negative price, yeah, incredible.
Yeah. So that there were distortions in the markets, but the thing that's interesting is that there was this sort of inflection point where suddenly everything changed. Absolutely everything.
So everything, basically, the dollar started to go down and everything else tangible started going up, and as well as the stock market, which has tangible and intangible elements to it.
Yes, that's correct. I would say the stock market is more, it's financial assets. I mean, the reason they went up, I think, is that it became perfectly clear at that time that the Fed was just going to print money like billio to support asset prices. And, people got the hint. And I don't know, it could be that central banks are in there buying stocks as well. I mean, certainly the Swiss National Bank has been buying U.S. stocks.
Right.
But it was just an interesting point.
Yeah, well, in spite of the fact that the central banks are suggesting, and not suggesting, they are pumping huge amounts of money into the system. We had the repo issue, which I think has still not been resolved by any means. But you state in your June 18th article, you said, and I quote again, "At this stage, an imminent banking crisis is now a near certainty, with most systematically important banks in a weaker position now than at the time of the Lehman crisis," end of quote. But Alasdair, here in New York and in the U.S. here, we're assured that our banks are in great shape. They're well capitalized. What are you seeing that differs from that?
Well, I would agree to an extent that your banks are well capitalized, but only well capitalized in comparison with particularly the European banks. I mean, some of the European banks are just absolutely incredible. The measure that I would use is not the balance sheet equity to total assets, but the market value of that equity in terms of the companies, the bank's capitalization relative to the balance sheet. Now, if you take that, in other words, what we're saying is this is what the market reckons the equity capital on the balance sheet is worth. In the case of Société Générale, at that time, the price to book, which is what we're talking about, was 20%. I mean, in other words, the price in the market was at an 80% discount to the book. Now, if you work that through in terms of relative to total assets, Société Générale have a leverage as far as the market cap is concerned of 108.7 times.
Wow.
Deutsche Bank 74 times, Groupe Crédit Agricole, another French one, 73.8, Barclays in Britain. This should worry us, 63.8, and so on and so forth. Now, the best on that measure really are the American banks because, by and large, the share prices are trading at more or less book value. So you haven't got that huge difference. But if you look at the amount of debt that they have got to deal with, they have massive problems, dollar debts are absolutely huge. And these banks have a problem, and that is they want to contract the amount of outstanding bank credit. But the Fed needs them to increase the amount of outstanding bank credit to rescue all the businesses which are going sour. So, I wouldn't say at all that the American banks are in a good position. It's only a relative story compared with banks elsewhere.
So the U.S. banks want to contract their balance sheet. They want to make fewer loans, no doubt, because they're looking at the economic landscape and they're not liking what they see for obvious reasons, I guess.
Yes, just imagine if you're a director of a bank, you've not only got the COVID thing, but you've also seeing how global trade is contracting because your bank will be international in terms of its reach. You'll be seeing customers with supply chain payment problems. Just product isn't getting through. They're not getting paid, and they're still got to pay the rent. And you've got, shopping malls and all the rest of it who are not getting their rent. I mean, you're sitting there thinking, now, is this an economy you want to expand your lending into? I would say no. I would definitely say no. Yeah.
Yeah. So there's a real conflict between the Fed and the banks. And, Alasdair, you've made these alarming predictions that I think you can't know for sure, but you think with all the information you can pull together, in your view, that the dollar could be in some really big trouble before the end of this year, globally, I guess, as the world's reserve currency. I would like to ask you then, do you see a banking crisis as a trigger that might start to cause the dollar to shake? It's already down, as you pointed out, from its high on March 23rd from about 102, I think you said, on the trade index. But do you see a relationship then between the potential banking crisis, global banking crisis, and the dollar?
Yes, I do. It's slightly broader than as you suggest, because I don't think it's just the American banks. I don't know where it'll start. It could start in Europe. I mean, that's that's where the betting should go. But I really do think that the banking crisis, when it happens, will be so all-embracing. It won't be like the 1930s. You get one bunch of banks going bust, and then another bunch going bust, and then another one going bust. I mean, you had rolling bankruptcies in the banks between 1930 and 1933. This, I think, will be a global problem. It'll be like the Lehman crisis. Suddenly we'll wake up one morning and think, oh my God, but it'll be worse than Lehman. Now, what it means is that all governments will have to rescue their banks, the whole lot. Now, this will involve effectively underwriting not just the banking system, but all their customers. So the inflationary implications are absolutely enormous. And I think the banking crisis, when it happens, is a wake-up call as to really what's going on. It, if you like, is on the path to the destruction of fiat currencies. It won't be a cause of it.
Alasdair, let me ask you, what comes after trillion? What's the number that comes after trillions?
Quadrillion, I think.
We have billions, we have trillions. I mean, how many? I mean, I guess we can do hundreds of trillions or billions of trillions. I don't know. I can't get my head around what $1 trillion. So what $1 billion is hard enough. So what you're saying is, if I understand, all currencies, all Western currencies at least, are going to be in deep doo-doo.
Yeah, that is, unless the national leaders somewhere sort of get to the point where they can actually call a halt to it and introduce sound money policies. It's going to require two things. It's going to require stabilizing the currency, which is probably best done by linking it to gold at some level. And the other thing is, it means cutting government commitments, financial commitments, and letting the economy sort itself out. I mean, that broadly is what used to happen before President Hoover, Herbert Hoover, started intervening in the wake of the Wall Street crash. Before then, the recessions, depressions, if you like, were really quite quick affairs. The problem is that governments, when they intervene in the economy, they stop the process of creative destruction, because you need to reallocate national resources from yesterday's businesses to tomorrow's businesses, and that can only be done by entrepreneurs. It cannot be done by government.
Yeah, for sure. In commenting on this subject of the currency's decline, the currency declines, you said, and I quote, "Anything that does not migrate from fiat pricing disappears, including most, if not all, ETFs. Goodbye to hedge funds, goodbye to offshore financial centers, goodbye to onshore financial centers, goodbye to 100 trillion of fiat money." Can you speculate about what life will be like if this pans out as you're envisioning it? I mean, it seems like a very frightening scenario.
You're right to call it frightening, because an awful lot of people are going to get hurt, and it'll be the people who are poorest, it will be the elderly, it will be the people who have been relying on pensions, and the pensions will buy nothing. So this is very, very serious. But to answer your question, what needs to happen is that sound money gradually comes into circulation. And here we're talking about, I think, probably silver more than gold, because silver, if you like, people have got a lot of silver. There are lots of silver coins around, and I think that they will become the currency. I mean, there was a time, I think, when your silver coins in America were pure silver. Those, I think, will come back and have a value. People will recognize them as money for the exchange of goods. And the number of silver coins that have been produced, in your case, silver eagles and so on and so forth. In our case, the Royal Mint has produced huge quantities of silver coins, commemorative coins very much. And I think they will probably come back into circulation. So I think that is, if you like, if you have silver coinage, gold as well, but mainly silver for the day-to-day, then I think that is probably going to enhance the chances of your survival in these times, and also the survival of your families and friends.
Mm-hmm.
Because you must take account of them as well. It's not just I've bought a whole load of silver coins, I'm all right, Jack. No. This is a community thing, really.
Absolutely. More than ever, it's going to have to be a community thing, and you have to wonder, will trading silver or using it as a medium of exchange be the black market, or will the government allow it to take place? That's another issue, of course, that we don't have time to talk about today. But, it seems to me, Alasdair, what you're suggesting is that prices in terms of fiat, the fiat money will become worthless, essentially.
Yes.
Because it's just endless, infinite amount of printing will make it worthless, so that people who actually own silver or gold, their purchasing power will grow dramatically, probably. So there will be a redistribution of wealth back towards honest money, away from this dishonest, what I would say, counterfeit money that governments produce, right?
I think you put it very well, yes.
Oh. So that's obviously then people want to, if they have some savings, make sure they don't have it sitting around in fiat. And of course, even since this new century began, gold has outperformed Warren Buffett's portfolio. So gold has done extremely well. And silver has a lot of catching up to do. Alasdair, with regard to China, your second article that I referred to, A Collapsing Dollar and China's Monetary Strategy, published on June 25th. And again, folks, you can read these articles. Go to goldmoney.com and read them. They're archived there. But recently on this show, you suggested that you thought the end of this year that the dollar, you still stick to your timing, or the idea that this could unravel very quickly for the dollar, that by the end of this year we could see the dollar ceasing as the world's reserve currency, essentially?
Well, not just ceasing as the world's reserve currency, but ceasing as a currency, full stop.
Wow. Okay.
Yeah.
Well, I'm sure... Yeah, go ahead.
Very, 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 very quickly. I mean, all you need to do is to educate yourself about what John Law did 300 years ago.
Yes.
It's exactly the same situation, except it's global rather than just restricted to France.
Oh boy, much worse. And in that regard, we don't have any place to run to. The whole world is in the same position, or at least the Western world. But I'm sure China's looking at this. As you pointed out, China has accumulated huge amounts of gold. And you have done a lot of work on this. You've observed flows from the west to the east and so forth. And what do you think? What do you think they're thinking now? They're certainly aware that the West is in deep trouble.
Yes, I mean this is such a difficult question to answer without being really very long-winded about it.
Yeah.
I think when it comes to money, they're being defensive. They would like to have the renminbi, the yuan, if you like, used more commonly for international settlements. They are doing that through swap agreements with all sorts of central banks. But the fact of the matter is that they've been using the dollar as the means of bribing, if you like, if we put it that way, the politicians in sub-Saharan Africa, anywhere where they have a relationship or need commodities. And, it's dollars that they lend to these people. It's not renminbi, if you like. So, if you like, they will lose all that power the moment the dollar goes. So it's not in their interest to undermine the dollar. So while we've got this Cold War going on with China, I think it's worth bearing that in mind. So their response to a collapse in the dollar, I think it's going to be reactive. There will come a point where they have to abandon the policy of buying off, sort of tin pot dictators in Central Africa or wherever. They'll have to abandon that and then start think about protecting their own currency. And at that stage, they, I think, will introduce some sort of gold backing. If they mess around with digitizing it, a crypto version of it or whatever, and this has apparently been being tested at the moment. I think that would detract from it, but we'll just have to see. They are in a position to move to back their currency with gold at a far higher price, incidentally. And I think the moment they do that, of course, it will be absolute curtains for any remaining fiat currencies that don't follow suit.
So what might trigger China's interest in doing that? At the moment, the dollar's worth something, and so they can still use that to buy tin pot dictators, as you call them, in Africa to gain their resources or whatever else they want to have from those countries. Would it be then this sort of cancer that kills the patient, this ongoing debt-based economy that we have that basically brings down the dollar, that would cause them to change their strategy because the dollar wouldn't buy anything anymore?
Yes, I mean, it'll be us that bring down the dollar, the pound, the euro, the yen, and so on and so forth. It will be us who do it. Mm-hmm. What China will not want to do is to be in a position where we turn around and say, it's not us, it's China that did it. Because that would just... that would be crazy. It'd be wrong and crazy. So I think that there will come a time where they abandon the international monetary system and go their own way. But they will only do that when it's absolutely obvious that the international monetary system is in a state of collapse and will collapse without any doubt.
Yeah. But what you're saying is that could happen fairly quickly. I mean, it's not going to be 20 or 30 years from now.
No, I mean, all history says that you can have a long period of erosion of purchasing power for a fiat currency, but there comes a point where suddenly it's usually first the international users of it discard it, and they've got an awful lot of dollars to discard. So that's the first phase. The second phase is that the man in the street, Main Street if you like, realizes the fraud that's been perpetuated through the printing of money. He realizes what's going on. He realizes that the purchasing power of the money is going to zero, and he gets rid of it as quickly as possible. And that stage in Germany in 1923 was basically between about May and November 1923, 6 months. Yeah. This could be about 6 months as well. And going back to that March the 23rd date, I just note that was an inflection point. Yeah. And I think that's probably, we'll look back, the historians will look back and perhaps identify that as the turning point in the destruction of currencies.
Yeah, well, it's continued, as you said. And just with a couple of minutes left yet, I want to ask you, in your article, Prices Are Going to Rise and Fast, July 2nd, you talked about monetary transmission problems as part of the mechanism, I think, that causes things to unravel. Can you just comment on what you meant by that?
Yes. I mean, I think the problem we've got is one we referred to earlier in terms of the transmission of the Fed's money printing, if you like, into Main Street. At the moment, it's quite obviously going into Wall Street and nowhere else. So we've got this ridiculous situation where Wall Street valuations just don't bear any relation at all to what's going on in the real world. Yeah, right. So is that is the transmission problem, and it comes about because the banks, as we discussed earlier, do not want to extend bank credit to anyone. I mean, they want to contract their balance sheets. They want to get out of risk. They don't want to take on more risk. So whatever the Fed says, I'm sorry, but that's not the route that money is going to get into Main Street. And so, it'll be helicoptered, whatever. There will be direct loans to corporates. And I guess the US Treasury will probably end up buying out, or if you like, acquiring all the banks, acquiring major businesses, trying to support the whole caboodle. And of course, you can't support the whole of the private sector economy without destroying your currency. And right. I think there's one little myth which I try to destroy in that, and that is that the Keynesians think that if you get a contracting economy, then prices fall. No. If you get a contracting economy, it is both the supply side, of product and all the rest of it, and the demand side going down. But what happens in this case is that we can see you get stagflation, you get inflation, particularly of certain demanded items. I mean, nobody will be buying luxury SUVs, or at least very few people will. Yeah. But everybody will be buying food. Everybody will be buying energy. And just watch the prices of those rise.
Those items, yeah. We're going to have to leave it go at that. I wanted to ask you about the economy. I think the V-shaped recovery is a myth. It's not going to happen. That feeds into the things you were talking about, the banks collapsing and so forth. Alasdair, we have to leave it go at that. Thank you so much for sharing your insights. Always very valuable.
And that's my pleasure.